experts, we will now host a roundtable on central bank digital currency. After the high-level aspects highlighted in our report from March, putting CBDC at the heart of global economics and geopolitics, as a tool towards further European integration and at the center of innovation in the financial space, we now try to dig more into the detail of the implementation and the practical impacts for users and players. Italy is at the forefront on CBDC, both at central bank and at private company level, and it aspires to lead the European projects from all fronts. Today, I'm joined by three experts in the field: Roberto Catanzaro, Group Chief Strategy and Transformation Officer of Nexi, representing the standpoint of payment companies; Daniele Savarè, Innovation and Business Solutions Director of SIA, a company at the frontier of digital solutions for payments, to help us understand the technical hurdles and solutions for CBDC; and by Silvia Attanasio, Head of Innovation of ABI, the Italian Banking Association, to provide us with the standpoint of banks. Thank you all for being with us today. We start with Roberto. Roberto, to you, what are the key reasons behind CBDC and the digital euro?
Thank you, Andrea, and thank you for having me today. Look, I believe the reason actually is quite simple, in the sense that we have witnessed in the last months a number of things happening in the market that are leading more and more central banks into waiting this kind of solutions. I believe that three elements have been key into driving these. One has been the rise of private stablecoins, one name above everyone, which is Facebook with Diem. The second is the movement from other central banks, like, for example, China, into starting considering and maybe testing in the market this kind of digital currencies. And the third is a general, let me say, worry about how in the future the monetary sovereignty and all the stability effects in this new environment in which borders are much less important and in which transactions can happen at the speed of digital and so on and so forth, how this can actually impact and change the way in which central banks are performing their duties. So this in the end reflects a little bit to Europe and to the European Central Bank. And therefore I believe that the key reasons are actually more kind of geopolitical rather than purely technical. And this is the first angle that we should always consider when we discuss all the implications of this kind of initiative or this kind of potentialities in the future. So therefore, I think that the anchor in these lies a lot in a number also of initiatives that have been happening at European level to start building a European center of gravity in digital payments. Digital euro is one. API, the European Payment Initiative, is another one. So we should look at these always in the angle of how can I address the new threats and the new challenges and the new changes in the monetary landscape, maintaining the control over the monetary policies, over what's happening in the market, and so on and so forth. Then, of course, this is the key reason, but then you can always move forward and considering also which benefits and which changes this will produce in the market. And you can imagine a lot of positive things. But I think that the prime mover is and remains mainly geopolitical. Then it's up to us as markets and in the collaboration between public and private to discuss how can we bring these geopolitical reasons into concrete and customers' benefits, merchants' benefits, benefit for the banks and the world system, and so on and so forth. It's a little bit our challenge to take that input and transform into something else.
Thank you, Roberto. And so, following on from what you've just said, can CBDC be an innovation that works for users, for central banks, for commercial banks, and for payment companies? Silvia, Roberto, and Daniele in the order. Thank you.
Thank you. Thank you so much. First of all, I think all these categories share the same top priority, to preserve financial stability. This is the common background that put in the same level all these actors. Moving one step forward, I think users will have the opportunity to experiment new innovative services. Central banks would have the possibility to keep the money under their exclusive control, and banks will find room for innovation in payment initiatives beside other innovations that Roberto already mentioned that should keep together. The key here is to make synergies on investment.
Roberto?
Look, I think that generally speaking, when we look at CBDCs, there is one key word, which is digital. Everything that is bringing digitalization and innovation in payments from our angle is beneficial. And actually, I'm very happy that there is this kind of public discussion around these CBDCs, because this is bringing digital payments in general at the forefront of the policy making and the public discussion. That said, I think that we should always really have the consumer benefits in mind. And the challenge and the question that we should ask ourselves is, how can we bring additional benefits and differentiating use cases on top of what already existing digital payments rails and digital payments methods offer to consumers and merchants? And this is a little bit the challenge. Honestly speaking, I think that there are opportunities. I think that you can imagine a lot of new services. And maybe we can talk about this later more in detail. But it's not so easy. You have to take the right technical decisions. You have to involve strongly the private sector into designing the infrastructure and the use cases. So we need a really public and private partnership in this. And always, in the end, there will be always someone who is kind of putting a method of paying, whether it's physical or digital, in the hand of consumers. And there will be always someone who need to kind of collect all the different cash-in methods and all the different acceptance methods and payment methods for the merchants to basically allow them to sell their goods and so on and so forth. So the value chain is not fundamentally changing. Adding innovation is our challenge, but we need to be involved from the policymaker early on into the discussion in how we build this.
Thank you. Daniele?
Yes, I think that if we analyze this in the perspective of the core infrastructure that we need to run this new payment scheme at the end, we have several actors. For example, the central banks, the commercial banks, PSP, the technical provider, and the users that are the citizens, corporates, financial institutions as well. So I think that if we want that all these actors could work in a safe, secure, and regulated way, we need to have a clear governance and a clear operating model that will ensure a proper role of each of those actors. For example, the central banks should issue and remove the digital currency from the schema, as they are doing today for the cash. Commercial banks should be regulated as well from the guidelines and rules set by the regulators, and they can operate, innovate, they can compete in the new payment schema. Users should benefit of the new use cases and new innovation, but they have as well to follow the rules that will be set. So, and the technological provider, again, they have to be selected by the central regulators, because otherwise we have a sort of, let's say, alternative payment schemes that are not well regulated and well, let me say, operated by all the actors. So at the end, I think that it's important to, let me say, repeat the typical payment schema rules and guidelines that we have already in place for the current systems, adapting these for the new technologies that we decided to use for the new digital euro.
Thank you, Daniele. So if we start zooming into the debate over DLT versus centralized models, can you, in simple words, help us understand the main difference between these two architectural models? We start from Daniele and then moving on to Silvia and Roberto. Thank you.
Yes, the discussion today is basically on these two paradigms. One is the centralized architecture against or versus the distributed architecture, typically based on distributed ledger technology that also is also called blockchain if you have the value on the DLT, on the distributed ledger technology. I would say that the centralized architecture is not far from what we have today. So it's based on the concept of having an account and a value that is stored in this account that is representing the value, is not the value per se. So it's representing the money that the commercial banks are using for transferring value from one account to another. The settlement of these transactions are typically done through a central counterparty, and there are the rules that are setting this. And I think that this is something for transferring the value immediately that can be based on the instant payment. So we have seen this architecture already implemented. We have implemented this, for example, in Italy. We have Bancomat Pay. We are working as SIA in several countries implementing these new digital systems that are already working. On the other side, the DLT is completely a new disruptive technology, is not requiring a central counterparty to settle the transactions, and the value is stored in a token that is actually, imagine a string, a byte, that this is representing the value, is not needed an account. Those tokens are stored in digital wallets that are, quote unquote, doing the role of the account. And basically, if you want to transfer the value, you are simply transferring the token. So you don't need to have someone that is managing this centrally. And the transactions are validated through the use of the validation algorithm of the blockchain that is ensuring the transparency, the audit functionality, and the speed of the transaction. So the powerful here is that imagine that you have an email and you are sending the money, attaching the bytes to the email. You are directly sending the money to the recipient, while on the centralized, you are asking someone to move the money from one account to another. So those are, simplifying the main differences of the two paradigms.
Thank you, Daniele. So, Silvia, what does that mean for banks?
Yeah, let me focus for a second on the final result. When we express a preference for a specific technology or a specific architecture, mainly we are saying that we want to reach a specific enabler for new services to be provided for citizens and corporations. So if we think to some of the services we can imagine boosted for CBDCs, probably we are talking about something that some fintech somewhere can already provide. But two considerations are important here, in my opinion. The first one is that our imagination is limited because we are targeting a completely transformed way of transfer value. So we are able to imagine some new service, some new model of using this digital euro. In the same way, in the first 90s, we were able to imagine new services web-based. So this is the first limit. The second one is that, nevertheless, we are able to see a first huge difference. That is that if we want to use a service provided by a fintech, we need all users to be user of the same fintech service. They need to be onboarded on the same service. And in real life, this rarely happen in common use cases. The digital euro could be the single new service we, as European citizens, as Eurozone citizens, will be all onboarded to. So this could act as a platform that enable the provisioning of new services targeting the entire population. This is the first openness that we can see thanks to an open architecture.
Thank you, Silvia. Roberto, from the view from PSPs?
Look, I think it's our angle is naturally slightly different from the one that the colleagues, and it's by the way, it's the richness in this. Let me just remind that as Nexi, we are active both in the issuing side and on the merchant services / acceptance side in Italy and in other countries, as you know, with the new footprint in the group. And we're really active also in the central infrastructure when, as we all hope, we'll finally close the deal with the colleagues in SIA. There is a general angle into this discussion, and there is a PSP-specific angle. Let me start from the general angle. The general angle, I think that this is a trade-off between speed of enablement and future proof of innovation. Because I honestly believe that a DLT technology is definitely much better in the long term because it's allowing a number of new things and new use cases that for banks can be an extremely important new source of revenues, and that for PSP are actually important because you can imagine that with the programmable money, for example, and with the composability of characteristics of a digital currency, you can imagine to further sharpen the simplicity, the speed, the ease of use, and the efficiency of current payment rails. On the other hand, imagining a centralized infrastructure is something that already exists in the market, is something that is already widely used by payment rails, whether they are interbank or retail. So probably something that can be brought to the market earlier on and start to learn and assess options. There are middle ways in the two of these. Honestly speaking, I think this is a general discussion. As a PSP, we are rather agnostic on this. So on the specific angle, there are not extremely big differences between the two choices, to be frank. Of course, we kind of lean a little bit toward the blockchain and the DLT infrastructure because of the future proof and the potential for the future. But should the central bank and the different national banks decide to go with the centralized infrastructure, we can be fine. And we are very happy of starting imagining what the new payment value chain will start to build, which actually is the same value chain, but with different, maybe, tools. Let me just explain this concept in a few words. What we envisage in a future with digital euro is that the payers, the normal consumers, have some kind of wallets or cards, which is actually kind of dual use. So you can basically switch between digital currency and normal fiat currencies. But in the end, you will always pay with your card or with your phone somehow. And for merchants, whether they are online or physical, you have to imagine a simple interaction with these payment methods in which the digital currencies are accepted and brought into a single collecting and settlement flow as it is now done for every other payment schemes or methods or rails. So the value chain per se is not changing so much. The technicality and the user experience should change as little as possible, because in all this discussion, we always overlook one key angle, which is that it's not enough to have something technically enabled. You have to convince consumers to use it. And keep in mind how long it took to convince Italian consumers to move on with contactless with cards. We basically took 3 to 5 years to reach decent volumes. So the less we change the user experience, the more we can speed up adoption of these, of any kind of CBDCs, whatever that be. On our side is, of course, is to build additional capabilities, leveraging the infrastructure. For example, I can imagine that after with the programmable money, an insurance company can pay out claims with specific conditions set already into the currency. You can imagine that when a kind of a central bank is distributing helicopter money, like it's been happening in many countries with COVID, you can therefore nail specific merchant categories in order in which you can spend that subsidies. So we can imagine a lot of stuff on top of that. But the fundamental value chain remains the same. You're basically building on top of that value-added services. And to do this, yes, blockchain and DLT are a little better, a little more future-proof, but as a PSP, we are rather, let me say, agnostic of whichever direction the banks will decide to take, even if you recognize the long-term value of DLT.
Okay, very clear. So if we move instead to the issue of coexistence, how do we manage the seamless interoperability between central bank digital currency and the current systems? Silvia.
Yeah, this innovation is Janus-like, let me say. So it faces two different worlds. From one side, traditional architectures would bring interoperability with existing and current systems. We need to have this, let me say, fluency, this frictionless interaction between the CBDC and the traditional existing world. On the other side, distributed architecture could enable the native programmability we advocate for. This is not just a simple if-then condition related to the money. Programmability is much more about composability of services, is about a very short time needed for implementing new use cases and new specific services related to the CBDC. At the same time, so probably this hybrid between the two architectures should be understood in the next future, in the next month, if the investigation phase will start in the decision of the ECB. It is important to know that there are no evidence of this hybrid working in the world. This is a complete new concept that needs to be experimented and tested. And I think it would be really crucial to be able to interact and to cooperate with the market, meaning the ICT providers, the banks, the PSPs, all the actors should contribute to this big effort and trying to understand in which way we can bring the final result, which is the only thing that is important to us, to citizens and to the European digital economy.
Thank you, Silvia. Roberto?
Well, look, I honestly believe that, our job is to manage complexity as PSPs. And we kind of already now routinely add new schemes and new payment methods. Think, for example, about the onset in Europe of Alipay and WeChat Pay, something that was completely alien to the European landscape that then has been now something that is routinely enabled for the merchant that we serve to allow them to receive and cash in from either Chinese expats or tourists when the tourism will start back. So I think that from a PSP angle, whichever direction the technology takes, it's our day-to-day job to manage interaction between our infrastructure and new things that happen in the market. Honestly, I'm not overly worried about that. What I'm more worried is the graduality and the way of making, again, the end users of these, whether they are merchant or consumer, accept that. Because I think that launching a huge big wave of any kind of innovation at the start is on one side technically very complex, on the other hand very difficult to align politically, and often a good recipe for not getting good understanding from the end users. So I think what is important is, yes, ensure interoperability, ensure similarity with what the consumer now is able to use, and prioritize what are the differentiating elements and use cases that we can bring, so that we start educating consumers on the new things that are happening, and we ensure that we bring up the market gradually and into this world of tomorrow, which I completely agree with Silvia, is something totally unexplored, and we can, as we will move into this, we will have new ideas, new opportunities. It's a fantastic opportunity in the long term. But we need to be gradual and very sharp in how we bring this to the market, and we ensure that this is actually not just for techno enthusiasts, but used by the wider public.
Yeah, very clear. Daniele, what's your view?
I completely agree with Silvia and Roberto. I would just add that, assuming this payment schema will be an additional payment schema, so the coexistence is the complexity of, let me say, integrating a new payment scheme from a technical point of view is something that we are managing very, very, very often. As Roberto said, we are always integrating new way of mean of payments or a different way or new technologies. So I think that is not really complex. On the other side, the interoperability, again, should be ensured by some of the actors that we mentioned before. Typically, it could be central bank, could be PSP with some value-added services. Is like, for example, for the FX conversion today. Tomorrow, you can imagine that there will be either some specialized players that are ensuring this, or the more generalist player, like the commercial bank, that are acting as a users and as a commercial bank, and then can ensure the interoperability of the different schemas.
Okay, fantastic. So given that you have all, one way or the other, mentioned the potential relevance and innovation of programmable money, Daniele, what is it and what does it require?
From a technical point of view, I would say that the programmable money is not a programmable payments only. So programmable payments are already working today, so you can create automatic payments. But the programmable money is different. As I mentioned before, the digital currency or digital euro is represented by a string, and is generated and managed through some programs that are called smart contract that are working through the DLT. So this concept is very important because they are, let me say, when you create the digital currency, you are creating also properties attached to these strings, and these properties can be used by the smart contract for several scopes. For example, you can have the concept of having some tokens that are following a specific scope. So, for example, you only can pay, I don't know, in some merchants or for some businesses or for whatever. You can split these payments through different rules. So basically, these smart contracts that are programs can automatize and ensure, huge number of innovation and new use cases natively and in a secure way, because they are stored and managed through the concept of the blockchain and the DLT. So I think that this is more or less the powerful of having these features on top of the blockchain. So basically you are moving the value, as I said before, very easily and in a secure way on the blockchain through these smart contracts that are implementing logic that the two or the multiple counterparty that agree on that smart contract are somehow signing upfront, and when events are happening, are triggering some rules, and automatically those rules can be validated immediately against the money, because the money has these properties, and then can automatize the payments.
Thank you, Daniele, for translating it for us. Roberto and then Silvia, can you give us some real-life examples and implications of an implementation of programmable money?
Yeah, absolutely, because this is something that we have been exploring from a little bit now, from a few months ago already. And I think that we see a huge amount of opportunities into the B2B payments to start with. With B2B payments, let me clarify, we refer to payments between industries, companies, not of payments between banks. Interbank payments is another game. B2B payments are intrinsically vastly complex. Typically, they are linked to other events that happen in the real world, for example, the shipping or delivery of goods, and often with complex supply chains and stuff like that. So the first things that we believe will come to life with the programmable money are how can payments follow the production cycle. And with Daniele has explained, so with the ability of basically programming rules into the specific tokens, you can hugely simplify all the world of trade finance and related payments, all the world of real-time supply chains and related payments. And for example, on the interaction between the HQs and the distribution networks, which now is really complex, and often it's something that is custom built by companies to manage with traditional technical architecture. And this, by the way, is a huge opportunity for building new services for us, so it's something that is quite interesting. With time, probably maybe a little bit afterward, not so much in the future, but some as a kind of a second wave, we are looking also at consumer-based use cases. Why as a second wave? Because what I mentioned before, you need to educate consumers first on the basics, and then you start building additional stuff on top of that. In that angle, in the consumer angle, I think that the key element is how can you use programmable money to ensure that specific amounts of money are really, really set for specific users. Imagining again the support and the subsidies that have been coming to COVID, which can then be reserved only to buy, let me say, staples and first need goods. Or imagine, for example, if you want, as has been discussed, reserve universal basic income to specific purchases. So all this kind of stuff will be really, really natively implemented into a digital currency. While instead it's much more complex to do. You can do it by programming the payments, but it's much more complex. But I think this will be the first use cases that will come into the market as this becomes a reality over the next months/years.
Thank you. Silvia?
Yes, as I said, we are in the early 90s facing the web, and at that time no one was able to foresee Facebook or Twitter. So now we are moving the existing paradigm we already know and trying to transform it thanks to a programmable money. Having said that, we, as ABI, had the opportunity to work with a group of 18 banks from December to March and cooperating with the SIA and with 4 digital partners, which are Entity Data, PwC, Reply, and Fabric, to develop 4 demos to try to explore the new kind of services that could be enabled by a digital euro. My favorite example is related to culture bonus, which is a bonus that is provided by the Italian government to teenagers turning 18. It is an amount of money that is reserved for buying books or theater or concert tickets or something similar. How does it work today? The bookshop seller should apply to the Culture Ministry website. It receives a window sticker for its shop, and then the teenager come into the shop, select the book, and pay with paper, so with the bonus. From time to time, the bookseller goes to digitally to the Ministry of Culture to receive money against the bonus. Then in Italy exists also another bonus that is reserved for teachers, more or less the same categories of merchant eligibles, but it is another ministry, another application service, another window sticker, another redeem process. So it is all complex and requires time and cost to be implemented. Now imagine that it would be possible to give an amount of money together with a smart contract that set exactly the rules, the expendability rules of that amount. This means that simply the teenager turning 18 receives this money, goes into any library without any application process put in place before, select his book and pay at the cashier. The smart contract atomically verify that the rules of expendability are satisfied. It becomes spent, so the smart contract is consumed and it vanishes. So the money is free for any kind of use the bookseller would use it for, and receive immediate liquidity instead of paper that should be redeemed. Then if the ministry wants to issue another bonus, It requires just to develop and to write a new smart contract. In our experimentation, we developed a new smart contract, and it requires 2 days, 48 hours. This is the simplicity we need for. This is something that can really boost our economy.
Thank you, and I can really see the excitement into this potential new tool that could be introduced with CBDC. So let's now turn the page and look instead at potential threats. What is the risk to you that while we're discussing about a linear evolution from here or about all the potential upsides, we could instead have a radical disruption from external players to the current framework? And what can we do to avoid it? We start with Daniele.
I think that time is crucial here. So there are a lot of pressure coming from external players, also international providers that are pushing a lot. It was actually originally, the original push was the Libra project, that wake up a little bit everybody. I think that this is crucial, and the roadmap, and it's important to have a clear roadmap for the implementation and for the experiments. But what I see is that we are discussing about 5 years and or so for an adoption of this digital euro, and 5 years is like a century in the digital world. So it's not really probably the right time frame. So we need to speed up as much as possible the experimentation and the roadmap. We, as a SIA, we have already provided the infrastructure to the Italian banks, and we have a platform that is exactly implementing what we have discussed so far. So basically the clear governance rules, the clear roles of all the actors. There is also the concept of the SIA Chain Lab, that is actually a lab in which all these use cases can be developed in a few hours. And I think that we are ready for at least for the experimentation. And then, the regulators and, the proper actors will decide how to move on. But at least let's start immediately the experimentation and prove that is working, is reliable, and also the performances are enough to guarantee the proper infrastructure to support this new digital currency payment schema.
Thank you. Roberto? Look, I think that we should consider and trade off different angles here, in the sense that on one side I fully agree with Daniele. Time is of the essence because and many things are happening in the world in this, and from an angle that is the one of the central banks, I can see the urgency somehow. On the other hand, if I again take the angle of the PSP and the end consumer and the end user, I have to say that the jury is still out whether should, let me make one example, Facebook launch DM tomorrow or China make the digital yuan available to Europeans. The jury is still out whether this will see a massive uptake by European consumers into this kind of solution, because there are a number of considerations. There are considerations of trust, there are considerations of security and privacy. It's really to be seen, to be honestly speaking. If I generally looking at the big digital giants, in the last few years, with the exception of Facebook and DM, all the others have chosen to partner with the existing payment rails when they have launched the new innovative solution. Think about Google Pay and Apple Pay, to make one example. They are actually using the same card infrastructure that has been in place for many years for now. Amazon has tried with Amazon Pay to be the kind of internal closed loop payment solution, but this is not getting so much traction so far. So, yeah, it's debatable what will happen should this kind of threat start to materialize and which time frame we do have to react. Generally speaking, I think that the threat do exist. The best defense against them is to start putting into the hands of our consumers and our customers, our common customers, advanced solutions that satisfy their needs. The more I already have a payment solution or payment methods which are simple, secure, fast, really simple to use, why should I in the future start, unless I have some illicit interest, that's another game, but why should I look into DM? I have already all what I need to pay in stores, to pay online, to manage my money, to transfer money to my friends or family. The need, if I cover the need to what is already there in the market, and there are really, really advanced solutions, a really good solution in the market in Europe and in different countries, the need for consumers to look elsewhere becomes much, much, much less restricted. And therefore, the potential uptake from threats become much less significant. So I do agree with the sense of urgency, but the sense of urgency should take two angles. One, let's build these as fast as we can and discuss how we can bring this to the market. On the other hand, let's make good use on what is already there in terms of digital payments capabilities to really kind of, let me use this term, saturate the needs of our clients, of our consumers, in order to defend from these kind of threats.
Thank you. Silvia, the final word to you.
We are now facing an innovation with a great transformation potential. So it would have an impact, a much more impact than just a replacement of a settlement infrastructure into a new technology. So I think it would be really crucial to work together with a distributed governance for finding the best way to develop quickly. I totally agree with Daniele and Roberto, quickly to develop and to release the CBDCs. Just the last word. Too often, in my opinion, the current scenario is compared with another one, just adding the digital euro as another brick. Recently, Fabio Panetta said more attention should be paid to the stability risk if the ECB does not offer a digital currency. There is a price in not acting, and this price could be high, very high in this case. In my opinion, programmable money and DLT are here to stay. So it is better to surf this way and not become food for fish.
Fantastic. This concludes our panel. I want to thank our guests for illuminating us, allowing us to continue to learn about this very actual topic, which we will continue to study from all fronts. It is nice for now to see Italy can play a leading role in this innovation. We see you after the lunch break. Thank you.